Hey, how you doing?
All
Good.
right.
Good, good.
Long time no see.
Yeah, it's been a little while. I said last time we were on a call was like feels like last fall, was it?
Something like that. I don't know. I have no sense of time. It's
Yeah,
all blurred together at this point.
for real, for real.
This is going to be casual. I mean, Kim, I don't know. Maybe you want to do an intro, or maybe you can do an intro in like a minute. We'll give a couple more people to come through,
Okay.
and then yeah, it should be casual. Just like you can run the show, but basic
Right.
AMA style.
Yeah. So I'm a fractional CFO in addition to being a lawyer. And I know that trust accounts have been a big issue and no one knows how to do them because like we say a lot, we went to law school and we were told there was going to be no math, right? That's why we went to law school. So I'm basically offering my experience and expertise to help you with any questions that you have about trust accounts and what you need to do. So I don't know, Julia's hanging around, but she's not on video, she's on mute. But so Josh, you may get to just do a Q&A, any questions you've got. Um, my biggest tip is to do a monthly three-way reconciliation. Um, that staying on top of your records keeps everybody happy. The client's happy, opposing parties, the third party liens, and most importantly the bar. So questions?
Yeah,
Yes, I definitely have questions. I'm sorry, I've
Yeah,
just been finishing up a piece of toast.
that's
Um,
fine.
We like to
when
keep
I
it
was,
casual and hey council. Go for it.
um, so one of my questions has to do with, like, in reading the California State Bar's various rules about trust accounting. Um, there's kind of also some like references to like you as the attorney or your firm having policies and procedures.
Hmm.
And is there any kind of guidance or examples that someone could go to like start building their quote unquote policies and procedures other than, yes, I will follow the law, and yes, I will delegate the actual reconciliation work to a qualified bookkeeper to, you know, and I will keep the records for X number of years.
Hmm.
Any thoughts on that?
So I do have, I mean, my clients get it. I have an entire accounting manual for law firms. Um, so in that we talk about things like um, who has access to the trust account, um, signature authority, things like that. Then you also the requirements that you do monthly, especially California. California is a big driver on this. Used to be annual reconciliations and then it went to quarterly and now it's monthly. And if you are behind, they can actually ding you just for not having a monthly reconciliation. So your processes need to really reflect that you're looking at least monthly and preferably even weekly, depending on the volume of transactions that you have in your firm through your firm trust account. So some of the other issues that we see that need to be addressed are, can you do electronic transfers, right? A lot of banks and firms decide as a matter of security that those are limited. Maybe you can do them to your operating account, but you can't do them to other accounts, so that you can take your own fees out. But everything else has to be things like wires and or special, ACH, where you have to push them out they can't be pulled out, right? Just as a security measure. So you may want to look at those requirements from your bank and have that reflected in your policies.
Thank you.
Yeah.
If sorry, if a client is, has some invoices that are out, and I think this probably gets applicable now that we have clients that are now, getting back on top of their own AP or RAR, and they also have like incoming work as well that they're looking to put deposits down for.
Mhm.
And I haven't seen this happen yet, but I could conceive of a situation where a client sends a single wire transfer to cover both the work that's been done, so obviously shouldn't go to trust, and the work that hasn't been done, which should go to trust. And they send it to one of the two accounts. My past understanding is basically that as the lawyer, it's our job to, as long as it's not our fault that they did it, of course, that's a different story, but assuming that it is not our fault and that we properly told them to put the right amounts in the right accounts, is there like a kind of a commonly practice or commonly accepted practice of how to fix that situation?
Yeah. The state bar is not going to come after you because the client sent a mix, right? Fees that should have been in trust and should have been to operating, right? No one's going to come after you. It's just that you promptly, hopefully the same day or the next day, but like don't wait for like 6 months to do this, but you immediately go ahead and make it right, right? And make sure that your files document exactly what you did and why you did it. Right.
Mm-hmm.
So if you've got $1,000 that comes in and you need to split it, 600, 400, right? Trying to keep it so that we know what the difference is. So you say 600 goes to the prior invoices that can stay in my operating account. And then you transfer the 400 to your trust account.
Mm-hmm.
Right. And you reflect that on the ledger for your client, like in their file, but also in your trust records, right? About why you're transferring $400 from your operating account to the trust account and what client it applies to, right?
Okay.
So one thing to remember, one of the problems with a lot of bookkeepers is they only do a two-way reconciliation, right? So at the end of the month, they take the bank and your QuickBooks and they make sure that those transactions are accurate, right? But you really need to do a three-way reconciliation, which is your bank, your QuickBooks, and your practice management, right? Wherever your client records are kept, right? And so you need to be able to take your QuickBooks amount transactions and say, every single client, this is what their balance is, and these are the transactions that they had, right? And so making sure that it matches up, not just at the bank level, but the sub account level, right? And so making sure that like in your monthly reconciliation, you would show that not only did I move this $400 from my operating account to my trust account, but it was for this particular client.
Yeah, gotcha. And so that is like that's doable in QuickBooks though, right? Like if you do break out your clients
Right.
properly.
Yeah. So, yes, you can if you do it, if you use the AR module in QuickBooks or the sub ledger. But also, if you're using something like Clio or Practice Panther, wherever you're doing client work, however you're following all that through, you also want to reflect it there. All right. So that basically, let's say that you're using Clio as your practice management solution, and that's where you do your time and billing, right? And so you're sending the invoices there. You want to make sure that that client record has that transaction recorded as well, so that if you run a trust report out of Clio, it's going to match what's in QuickBooks.
Gotcha. Um,
How is that reflected in Clio? So basically, when you're sending an invoice, is it a particular line item or is it a separate invoice for trust account stuff?
So the invoices typically will go out, like if you're doing an hourly invoice, right? So you got all of your stuff, it's got a total at the end, and you send it out. And basically if you send out like a credit card link, you direct it to go pay to your operating account, right? If you're like, hey, I need you to replenish the retainer, you send the link to your trust account, right? But in Josh's example where, hey, I've got these old invoices plus a replenishment, and they're just going to pay on with one, right? Whether it's, credit card, ACH, check, whatever. And because they're only doing one transaction, right? You would have to tell Cleo that, what those are when you assign it, right? Because you can go through and like check and say, I paid invoice 1, invoice 2, and then like the trust replenishment request.
Okay.
And make sure all of the fees, like the credit card fees, are coming out of your operating account, not your trust account. That's a big one.
yeah. I actually got another one related to fees and wires. So if somebody's wiring in, and I don't know if it's just like area practice, but I deal with a lot of wires coming in from overseas for U.S. work. But if a client is sending a wire for a deposit, and it's going to our trust account, and they, like obviously the Swift fees will come out of that, or their bank's fees. We may not know because say they send $1,000, we'll just see, what would it be like, 980 post to our account, and we won't know the distribution of the fees at that point. Is there a way that you would recommend, I guess, ascertaining where those fees came out, and then would you then also replace those?
So it depends on who's charging the fees, right? If it
like
is
my
your
bank versus
if it's basically because of your account, right? Like it's something that you're responsible for, then you would need to replace the fees, right? If it is something that is like the sender's bank, right, then they're responsible for those fees.
Okay.
Right.
So like discern whether it's SHA or OUR, and then based on that.
Yeah. So most of the American-based banks that are authorized to have IOLTA accounts with the states know that they can't take those fees out of your trust account, right? That's one of the rules. And so otherwise they couldn't get, approval from the state bars. And so they're going to take those out of the proper one, right? The proper operating account, or whatever account you've designated. Now sometimes things happen, right? There's one of the reasons I don't recommend people using things like Stripe, right? Because they can't do the like put my money here, take my fees out here, right? In fact, they're only depositing the net, the transaction minus the fees.
Yeah.
Right. So in your example, $1,000, they're only depositing 980, right? You see that a lot with Stripe. Right. Now, if you use LawPay, they'll only charge you at the end of the month for all your transactions, but it's always coming out of the operating account. So like you charge $1,000 through LawPay, they deposit $1,000, and then your $20 or whatever the amount is, I know it's higher than that, it comes out at the end of the month, right?
If it's like a wire, it's pretty low, and I mean, LawPay has been phenomenal from a trust accounting and invoicing standpoint. So totally would recommend that.
Yeah, no, I use it for my firm too. Now I managed to avoid trust accounts in my own firm because I hate them so much, right? But when I'm working with all the other law firms, you know, as their CFO, that's where we see a lot of the issues. I will also tell you, you know, I mentioned bookkeepers that don't know the law industry, right? And trust accounts where they always show their ignorance, right?
Mhm.
One way that you can tell if your bookkeeper is good and knows anything about trust accounting is to look at your balance sheet, right? So you should have in the assets portion, you have your accounts, right? Because that is cash that is under your name. But that's not your cash. So there should be a matching liability, right? That's basically like funds owed to clients or your funds held in trust, right? And those numbers should match, and they should match every single month. And if you go in and look at the liability account, there shouldn't be any type of transactions that look like, you know, basically to force reconcile the account, right? It should be actual transactions that go in and out, not any kind of adjusting entries, right? So one of my clients, they were using a CPA, situations happened. The one that actually knew their stuff was no longer there, right? So they passed it off to somebody else in the firm that didn't know it, and they just did a year-end adjustment to make those amounts show, right? And so that was one of the ways we go, hey, this firm is no longer capable. They were really good, but no longer did they have the ability to work with this law firm. So,
It's me looking at my balance sheet right now.
yeah. They're like signing into Intuit to see what's going on.
Yeah.
Right.
So on that, if you have, you kind of brought up something with multiple jurisdictions, and I gotta be honest, I'm surprised there's not more people on this call because this is like,
We're blaming Brian.
Yeah,
this is like critical stuff.
Yeah.
So if you have like multiple jurisdictions that you're borrowed under, right?
Mm-hmm.
And you know, like for instance, for me, I have the USPTO, which does not allow advance payment retainers. New York does. So in New York, you don't have to put your deposits necessarily in the trust account as long as that's what's agreed with client.
Mm-hmm.
When you're dealing with kind of like differing rules like that, you know, do you have like a typical recommendation? Is it just go
Typically,
with the more
I go with the
restrictive
most
one?
restrictive one. Now, some jurisdictions, their rules are so far different that it's like I can't reconcile those. In which case, it's like, all right, you need 2 different trust accounts, right?
Mm-hmm.
And so you're gonna have, you know, like a New York and a New Jersey, right? And so you're like, this sucks, right? Because now I have another account that I have to keep track of, right? But also, if you think about it, you know, these accounts are earning interest, but it automatically goes to the state bar, so like it never hits your account. So like, okay, maybe that, you know, which state do I send the interest to? It kind of makes sense that you have separate ones. But, you know, you go, all right, this client is under this jurisdiction's rules, right? Based off of probably where they are, where the transaction or something like that, right? Gets really fun, and I use fun in quotes, when you're doing things that are federal law. That's not based off of something like, hey, I'm in New York, I'm doing a New York case, right? I'm doing a copyright case, the client's in, or trademark, and the client's in California, and I'm not licensed there, but because it's trademark, I can do it wherever, right? And so I would go with whatever your most restrictive state is and follow their rules unless they're just not compatible, right? And then you have to go through the analysis of what state, what jurisdiction is this covered by.
Gotcha.
Okay, so I have kind of a weird one-off, and this might just be too. I also because it regards an investigation, a government investigation. I can't like talk a
Yeah.
lot about it, but I had an advance fee payment and deduct, from a company that is now in bankruptcy, and
Okay.
so and I had already deducted my earned fees, but there is a balance that's remaining and it's in my trust account. Have you ever encountered a situation like I'm getting like I have these nervous feelings because it's like, well, I'm holding on to like a few $1,000s of this company's account and they're in bankruptcy and they, people are going through and like the whole bankruptcy trustee is looking for every bit of dollars to
Right.
that, right? But nobody's reached out to me formally. And have you ever encountered an overlap with bankruptcy proceedings?
Yes. And they are the biggest headache. Like,
Oh,
I feel sorry for you. I'm just gonna,
no.
like, apologize that you're having to deal with this because it's a headache, right?
Yeah.
And so you've got competing interest here, right? Because you've got things like attorney-client privilege. Can I even go say something to the trustee about the money being here, right? Then
Right.
you've got it, and you may not even
Or
have
do
a
I
situation.
disclose the government investigation, which I mean everybody knows about, but it's not my prerogative or privilege to disclose.
Right. Yeah. So, if you also got, I mean, just a normal bankruptcy case, like you got some issues, right?
Mhm.
But typically in bankruptcy, the trustee steps into the shoes of the business, right? Like they are now the owners, that they now get things like the privilege, right? If there's the complicating factor of the investigation, I'm gonna say your best bet is to reach out to an ethics counsel,
Okay.
right? So that you'll have attorney-client privilege with your ethics counsel, so you can lay out all of the facts, right? That you obviously can't do on a webinar with, no privilege and things like that. So talk to the ethics counsel, lay out the facts, right? They can work with all of the different parties to help you. And a big one is check with your malpractice carrier. They may actually have ethics counsel that you can go talk to.
Oh, okay.
Right. And it may even be covered by your premiums and your policy, so that it's not going to be, something out of your pocket.
Yeah.
If you do want, there's a couple ethics counsel that I've used in the past, and also a couple who are on the Hate Council network. So happy to send you some names.
Yeah.
Oh, great. Okay.
Yeah, I also one of the guys I went to law school with is now one of him and his firm do a lot of malpractice claims representing insurers plus self-insured. So I can also give you a recommendation there if you need one.
Okay. Thank you.
But yeah, that's going to be the easiest way to stay out of trouble is go talk to an ethics counsel and work through everything based off of, exactly what type of investigation, who's involved, the seriousness of it, things like that.
Yeah. Thank you.
Yep. Also, not knowing exactly on the bankruptcy, the timing on when you took your money, your fees out of the trust account, know that could be an issue as well.
Yeah, it was before the bankruptcy.
Okay.
Yeah. I'm holding on to this balance.
Yeah, but I'll say that's a great example of why you don't want to keep balances in your trust account, right? Like as soon as you can get rid of money, you want to get it out, whether it's your fees that are owed to you or to a third party or to the client. Like you want to, sorry, my Alexa just went off. That was really weird. But you want to try to get that money out, and by doing your monthly reconciliations and checking, you're staying on top of that to make that move faster.
Gotcha.
Yeah. I mean, was working with an estate planner um a couple of years ago, and she was serving as the executor and trustee, but so she did the estate plan. The client died. She's now the executor and the trustee, but the beneficiaries have like moved internationally and they're like not responding to everything. And she's like, I've got to get this money out of my account so that I can retire. Right. Now hers wasn't an IOLTA, it was a separate trust account, but she's like, I've got to get rid of this. I want to retire. What do I do? So there are ways to get even old balances off your books if you've got people that won't respond, right? Through a process called unclaimed property. And so it basically goes to the state and they hold it so that you don't have to hold it.
Yes, I'm familiar with having prosecuted False Claims Act cases regarding the California Unclaimed Property Act.
Okay.
And where people don't realize that they should be reporting money to the state controller's office.
Yeah, I did exclusively unclaimed property for 9 years. So yeah, I did audit, defense, and compliance work, making sure that companies reported that stuff. So it's a little special kind of thing I've got, but it helps lawyers a lot because you get to clean up your trust accounts.
That's super helpful. How do you handle money in flight? So say the clients goes into law pay and they do their credit card payment or e-check, and obviously there's a few days between when they make that payment and when that hits the trust account. As far as accounting, do you put that toward undeposited funds until it comes in, or do you put it directly into the trust account as a sales
So
receipt or something like that?
I only reflect the changes once it hits the account.
Okay.
Right. Fortunately, law pay is typically like next day it'll hit, right? At least in my experience, there's not been a long delay. Maybe if you're doing really large or international transactions. But yeah, I only reflect I never take the checks in the mail approach. I never adjust the accounts until I have control or possession of the money. Right. Mostly because things happen, right? If the check's in the mail, the check never gets there, or they run their credit card and it gets blocked because of a fraud thing on their end, right? Or they're over limit or something. So it may be initially approved, but then their fraud, Amex fraud department decides, hey, this is suspicious. I don't know why you're paying an attorney, right? Like, we don't think that that's normal, so they block it, right? And
Yeah.
you may have to, the client plus you get to get on the phone and work through all of that. So yeah, I don't, until I have control or possession of the money, it's not reflected on the books.
That's smart.
Do you
Hi,
have
Maria. I see you lurking over there.
Maria? She jumped
I'm
in.
just a lurker to support you.
Oh,
You know, I
thanks.
don't have trust accounts, but I always love hearing from you.
Thanks. Yeah, I know, a lot of especially the fractional general counsels have done everything they can to structure their practices so that they do not have to deal with these issues. Right. So
Yeah.
a lot of that goes into your retainers and how you actually bill.
Well, why have another headache to manage? I mean, I'm just trying to get the bills out.
Right.
Yeah, but I mean, I also kind of don't trust a state bar either. So that's just me.
It seems like you have like preferences towards QuickBooks, LawPay. What is your like ideal stack for somebody who does have to
Yeah.
manage trust accounting?
So I practice management. I don't care if it's Clio, my case, Practice Panther, you know, and then there's also some of the larger ones that, you know, maybe the solos and small firms aren't using. I don't care what it is, but somebody has to have a practice management. You got to start somewhere, right? And then and I would like for it to integrate with QuickBooks preferably. Some people use FreshBooks and some use Xero, right? Clio accounting is coming along, but I don't think it's really there yet. So I'm not yet recommending that, particularly if you have more than like one attorney, right? Or you have any type of complicating, you know, situations. It's just not there yet. So I still recommend a third-party accounting, true accounting system. Most are using QuickBooks, right? It's still kind of the default. And then I like LawPay, and most state bars have now approved it as a, you know, a payment platform. I do not recommend Stripe. I don't think that they are compliant with trust rules. If you have everything going strictly to operating, that's one thing. But if you have to do trust anything, I don't recommend Stripe.
Is that because they take fees? Is that
It's how they handle the fees, yeah.
how they handle the fees?
Yeah. So LawPay, all of them are taking fees, right? It's just which account are they taking them from, and how and when they're taking them.
Okay.
That's been one of my biggest gripes with QuickBooks itself is I wish that they would just let you decide what account QuickBooks payments fees come from, and then, you know, they'd be able to pull so much business in.
Yeah. They would basically
know?
probably put LawPay out of business
Yeah.
if QuickBooks would actually be compliant with the state bar rules for trust accounts.
Yeah.
Yeah.
It
And there's
wouldn't
a
be
couple of other payment platforms too, but I think most people end up with LawPay as kind of the market leader right now. So, and I use it personally, so that's why I talk about it a lot.
What are other ones that are specific to, I guess, legal businesses or law firm businesses?
Let's see.
Or are there ones that aren't that are still that you would be able to use, I guess?
I was able to work with Chase before. FreshBooks used to use everything. Their payment processor was Chase before they moved to Stripe. So I was able to work with them. It was complicating, right? Also, who were those people? They're out of the Midwest.
Gravity or Confida or whatever it is now.
Well, they are a law specific one. I was trying to think. There's there's a merchant servicer that is not law specific, but they actually do their fees correctly. I'm trying to look it up real quick, and a friend of mine used to work for him. That's how I got introduced, and he's gonna kill me because I can't remember the name of the company. It's one of the big merchant processors, though. So there are some out there that can do it right, but you can't go and just say, I want you to take my credit cards, right? You're gonna have to work with them on the back end with a sales rep and the account reps to get it set up correctly. And then particularly the first couple of transactions in the first couple of months, you really have to be on top of your record keeping, your reconciliations, right? To the point I would check it like daily for the first couple of months to make sure the fees are actually coming out, right? Because like law pay, with it being law specific and Confida, they know exactly what they're doing. Sometimes with the other merchant services that are not law specific, they can be sloppy, or you just get somebody that doesn't know what they're doing.
Yeah.
Right. So like maybe part of it, like they'll have a monthly fee that comes out, but then the actual transaction fee doesn't come out correctly, or vice versa. Right. I've seen those situations. So when it does happen, first of all, you got to stop and correct it going forward, but you immediately have to transfer the fees into the bank account, the trust account from your operating account, to replace those fees so that the client is made whole and your trust account reflects reality.
Got it. Okay. Makes sense. I'm in Maria's bucket. I don't deal with this, but I'm learning.
Right.
Is that a topic for Hey Council, like on the Slack channel, or maybe another discussion about, like, especially for California barred attorneys, like how do you structure things so that you don't fall into the quote unquote trust account bucket?
Yeah, I mean, it would be a good topic to have an ethics person, or unless, something, Kim, you would feel confident talking about.
I mean, part of it is whether, and Josh kind of mentioned this before about the advanced deposits, right?
Right.
So like Maria doing fractional general counsel, if you're trying to do a flat fee every month, right? And are you billing at the beginning of the month or the end of the month? Right? So if you're billing in advance, right, then most states are saying you've got to put that into your trust account, right? There are some states that say, well, is it a true retainer, right? Or
Right.
is it, just a reserve, like a refundable? So like one of the things is, do you make it refundable or non-refundable, right? So let's say that your monthly fee is $10,000 for this corporate client, and with that they get 20 hours. Well, if they only use 15, are you rolling those hours over, or are you refunding part of your fee, right? Are you going to give them back $2,500 because they didn't use those hours, or is it just it's income to you? Great, they didn't use their time, right? And so that true retainer is, if it's non-refundable, a lot of times you get more into that true retainer. And then you get stuff like Washington State decide even the true retainer still has to be reasonable based off of hours, right? They're still very much, most of the state bars, it comes down to reasonable hourly rates, no matter how much time or value you provide. And it's really hard to get to value-based billing with the way that the state bars are still interpreting reasonable fees.
Yeah, I think most of us do like subscription based, meaning you have access to this bucket of hours. You could use it because that's what you've dedicated your time to. And if the client doesn't use it at the end of the month, it's considered earned. And so that's where you get away from the trust accounting.
Right. And some just say, you know what, I'm going to charge you at the end of the month, right?
Yeah.
Or I'm going to bill you at the beginning, but it's due net 30. So it's basically due at the end of the month when I've already done the work, right? And if they're paying after you've done the work, then obviously it doesn't go into your trust account either. But then you're also having to take a risk that you're not going to get paid for a month, right? And that's why I still love the credit cards, and I love the Law Pay credit card vault, so that even if they're sending me ACHs every month for mine, I can go in if they don't send it and I can charge their credit card, right? Or I can automatically charge their credit card every month.
Any final questions from this large group? I want to be sensitive to Kim's time and all of, I guess everyone's.
Yeah.
None for me, just other than, just to say thank you so much.
Oh, you're welcome. I guess my parting words would be 3-way reconciliations and do it monthly, right? And that's also going to lead into all of your other finances. Because if you're going to do that one, right, you're going to do the rest of your reconciliations and you're going to be like, well, did I make money this month? And you're going to look at your P&L, right? And so also by doing your main operating account reconciliation, you may actually find more like client expenses that should be, marked into, that you can take. I'll use a PI case, for example. If you've got a PI case and you're fronting all of the expenses, you get the settlement. Well, if you're paying it out without having all of those fees collected, you're losing money. Right. So by staying on top of it every month and doing both your operating and your trust account, you'll actually make more money because you'll collect all of those random expenses that maybe you put on your credit card or you wrote a check for or something. And so, and if you need a good CPA because you don't want to do all that yourself, I can give you referrals and recommendations there.
Amazing. Thanks so much, Kim. I do think, like, to Josh's point, this is so valuable and we should find a way I should find a way, and I take full responsibility to get like this information out there. And so maybe we could try running this back in a month or so with better kind of promotion on my end with the group, so we can get some more heads in here asking you questions. But yeah, I think this is like where this is rubber meets the road type stuff that people don't often have access to an expert like you. So I'd love.
And it's the quickest. Messing up your trust account is the quickest way to get bar complaints and unhappy clients, right? And usually the bar complaint comes because the client's not happy, right? So if they don't think that, like, when you do a settlement statement, if they're like, oh, you're ripping me off or you're taking too long, that's going to lead to a bar complaint. And then they're going to come in and look at do an entire trust account audit for all of your clients, not just that one. So, yep. And that's our goal, right? Stay out of trouble, stay away from the bar authorities.
Absolutely.
They cause themselves enough trouble.
Yeah, exactly.
Amazing. Thanks so much.
You're welcome.
Happy Friday, Junior, as my old mentor used to say.
All right. Thanks for joining us.
Thank you so much, Kim.
You're welcome.